Anthropic's surge is making OpenAI investors nervous. Iran's viral AI Lego videos are showing how propaganda has changed. A shoe company becomes an AI story. And Google is accused of breaking its promise as ICE access to user data raises alarms. Welcome to Hashtag Trending. I'm your host, Jim Love. Let's get into it. Hashtag Trending would like to thank Meter for their support in bringing you this podcast. Meter delivers a complete networking stack, wired, wireless, and cellular, in one integrated solution that's built for performance and scale. You can find them at meter.com/HTT. Anthropic is quietly becoming one of the hottest bets in artificial intelligence, and some of OpenAI's own investors are starting to take notice. According to TechCrunch, citing reporting from the Financial Times, OpenAI's roughly $850 billion valuation is starting to face some skepticism from some of its own backers. The concern is simple. The company is still burning cash at scale, and justifying that valuation may depend on a future IPO that could require a price tag of $1.2 trillion or more. And at the same time, Anthropic's numbers are moving fast. The Financial Times reported its annualized revenue jumped from about $9 billion at the end of 2025 to $30 billion by March, driven largely by demand for its enterprise coding solutions. That kind of growth is starting to shift the conversation from potential to performance. And that's where the comparison becomes uncomfortable for OpenAI. Anthropic is currently valued at about $380 billion, which one investor described to the Financial Times as looking like a relative bargain when set against OpenAI's much higher expectations. In other words, investors are no longer just asking who has the best model. They're starting to ask who has the better business. So what started as a David and Goliath story, Anthropic trailing far behind OpenAI and Google's Gemini for that matter, now looks like a race that's tightening. And in a capital-intensive market like AI, that shift in sentiment can matter as much as any technical breakthrough. A series of AI-generated Lego-style videos from Iran has gone viral, and they're hitting a nerve in the U.S. According to Al Jazeera, Iranian officials are now criticizing YouTube after the platform banned a pro-Iranian group that created the videos. The content mocked U.S. leadership and in one case declared Iran won before it was taken down. So there's a concern about censorship, but the bigger story is how effective these videos have been. Reports from outlets like Wired and the Associated Press describe a coordinated effort by groups such as Explosive Media to produce short, highly shareable animations using generative AI, and these clips, styled like Lego movies, use humor, music, and American pop culture references to criticize U.S. policy and leadership, often reaching millions of views across platforms like TikTok and X, as well as YouTube. What makes this different from traditional propaganda is the format. These aren't official speeches or state broadcasts. They're fast, cheap, and designed to blend into the same feeds as other entertainment in our social media stream. Analysts say the tone, simple, ironic, and culturally fluent, is exactly why they spread so quickly, especially among younger audiences. And there's a deeper contradiction here. Iran is condemning censorship on YouTube, while at home, it tightly restricts access to many of the same platforms, including YouTube itself. That tension highlights how control over information now operates in two directions, restricting it domestically while competing aggressively to shape it globally. AI isn't just changing how content is created. It's changing who can influence global opinion. And what used to require a state media operation can now be done by a small, digitally savvy team with the right tools and a sharp sense of what will go viral. There's an old line from before the 1929 crash. When the elevator operator starts giving you stock tips, it's time to get out. There may be a modern version of that playing out right now. According to CNBC, a footwear company called Allbirds is transforming into an artificial intelligence company as part of its turnaround strategy. After years of declining sales and a steep drop from its post-IPO highs, Allbirds, which had once been a darling of the market, has been trying to reposition itself, not as a sustainable shoe brand, but as a technology-driven company. And AI has become a central part of that story. Now, here's where the story gets interesting. It's dumping its existing business and its IP in favor of becoming a company that will provide what you can describe as a spot market, AI processing to fill gaps in existing supply and demand. It's a novel strategy, and it might even be profitable, but it's a huge leap from one business model to another. The company says it will initially seek to acquire high-performance, low-latency AI compute hardware and provide access under long-term lease arrangements, meeting customer demand that spot markets and hyperscalers are unable to reliably service. Now, the result? The company, which was valued at about $4 billion at its peak, sold all its intellectual property and other assets 2 weeks ago for $39 million. That's from $4 billion to $39 million. That's how far the company had fallen. The shoe company had a market cap of about $21 million Tuesday, which climbed to $148 million on Wednesday. In other words, the shares of this minuscule market cap company, valued at $21 million, increased by 582%. The shares, which were under $3 a day ago, jumped to $17. Which brings us back to that 1929 analogy, or for the younger among us, the 2000 to 2003 dot-com bubble and the bursting of that bubble. When companies outside of tech start being valued, or at least talked about, through an AI lens, that could be a sign of genuine transformation. But when the mere mention of AI drives the share valuation through the roof, it can also be a sign that the narrative is running ahead of the reality. AI may indeed be the most important tool companies have right now, but when it comes to being the primary reason investors get excited, it's worth asking whether the story is getting ahead of the business. Google is facing some new scrutiny over how it handles your data and whether it's keeping its word. The Electronic Frontier Foundation is calling for investigations into Google, arguing that the company broke a long-standing promise to notify users before handing over their data to law enforcement. The story concerns a PhD student, a dual British and Trinidad and Tobago citizen, who attended a pro-Palestinian protest at Cornell University. They claim for all of 5 minutes. But after that, federal agents came to their home looking for them. A friend was detained at an airport in Tampa and interrogated about their whereabouts. The student is now in Canada, but the issue of their data continues. On behalf of the student and their case, lawyers for the Electronic Frontier Foundation is calling for investigations into Google, arguing that the company broke a long-standing promise to notify users before handing over their data to law enforcement. In this particular case, Google provided the account information to U.S. Immigration and Customs Enforcement, known as ICE, without notifying the student in advance. The issue isn't just that the data was shared. Under U.S. law, companies can be required to hand over certain subscriber details through administrative subpoenas. The concern is that Google has repeatedly told users it would notify them first. According to the EFF, that didn't happen. Google says it reviews all legal requests and pushes back when they're too broad. It also notes that in this case, the request was limited to basic subscriber information, not the contents of emails. But the Electronic Frontier Foundation argues that these kinds of requests often bypass judicial oversight and that companies are not always required to comply. There's also a broader claim here, and this may not be a one-off. The EFF suggests there could be a systemic practice of complying with government requests quickly, sometimes at the expense of user notification. And here's where it gets a bit uncomfortable. For years, the implicit deal with big tech has been simple. We give you our data, you give us your services. And if somebody wants that data, you're going to tell us. The real risk for companies like Google isn't just regulatory, it's reputational. Once users start to believe those promises are flexible, the business model may start to break down. And that's our show. Once again, we'd like to thank Meter for their support in bringing you this podcast. Meter delivers full-stack networking infrastructure, wired, wireless, and cellular to leading enterprises. Working with their partners, Meter designs, deploys, and manages everything required to get performant, reliable, and secure connectivity in a space. They design the hardware, the firmware, build the software, manage deployments, and run support. It's a single integrated solution that scales from branch offices to warehouses and large campuses to data centers. Book a demo at meter.com/HTT. I'm your host, Jim Love. Have a thrilling Thursday.